Hey everyone, it's Blockwave, and I'm absolutely pumped to be breaking down a topic that has the potential to be even bigger than the last Bitcoin bull run. We're diving deep into the world of decentralized finance. You know it, you might even be a little bit scared of it, it's DeFi. Now you might be thinking, Graham, DeFi sounds like something only tech geniuses in their mom's basement care about. And yeah, I get it. But trust me on this one, because DeFi is all about changing the way we think about money, and whether you realize it or not, that affects all of us. Over the next few minutes, we're going to unpack exactly how DeFi works, the good, the bad, and the downright revolutionary ways it could change our lives. So buckle up, smash that like button for the YouTube algorithm, and let's get right into it. Alright, let's kick things off with one of the most popular aspects of DeFi lending and borrowing. Imagine this, you need a loan. Traditionally, you'd trudge down to the bank, fill out a million forms, and cross your fingers they don't laugh you out of the building. But with DeFi, it's all about cutting out the middleman. We're talking directly connecting borrowers and lenders through something called smart contracts. These contracts, they're like the digital enforcers of the DeFi world, automatically executing the terms of a loan agreement. No more shady bank fees, no more begging for approval. Platforms like Aave and Compound are leading the charge here. They've created these incredible lending pools where anyone can deposit their crypto and start earning interest, often way higher than anything your local bank would offer. And if you need to borrow, just deposit some crypto as collateral and boom, instant loan. It's like having a global, transparent bank right at your fingertips. Now let's talk trading, because let's be real, who doesn't love a good trade? But here's the thing, traditional exchanges, they can be a bit sus. We've all heard the horror stories about hidden fees, shady practices, and platforms going belly up overnight. DeFi exchanges, or DEX, are here to change the game. With DEX like Uniswap and Curve, you're in complete control. You connect your crypto wallet, and bam, you're trading directly with other users. No middleman, no funny business. It's all about transparency and security. Plus, since these DEX are built on the blockchain, every transaction is recorded publicly and immutably. That means no more shady dealings or price manipulation. It's the ultimate power move for the everyday investor. Okay, now let's get into the fun stuff. Making that passive income with your crypto. See, in the DeFi world, there's this concept called yield farming. Think of it like putting your money to work in the most efficient way possible. You're essentially lending out your crypto assets to different DeFi protocols and earning rewards in return. It's like having your money make you more money while you sleep. And then there's liquidity mining. This is where you provide liquidity, which is like being the bank for a DEX, and in return, you earn trading fees. Platforms like Yearn Finance have popped up to help you navigate this wild world of yield farming and liquidity mining. They're like the robo-advisors of DeFi, finding the best opportunities to maximize your returns. But, and this is a big but always remember, high rewards often come with high risks. Do your research, understand the protocols, and never invest more than you can afford to lose. Now let's talk about something that's near and dear to my heart, saving money. Specifically saving money on those ridiculous international transfer fees. We've all been there, right? Sending money overseas and getting absolutely crushed by fees. Well, DeFi is here to save the day with stablecoins. These digital assets are pegged to the value of fiat currencies like the US dollar, providing stability and reducing volatility. Think of them like digital dollars but on the blockchain. Stablecoins like USDC and DAI are making cross-border payments faster, cheaper, and more efficient than ever before. You can literally send money across the world in minutes for a fraction of the cost of traditional methods. It's like having a global Venmo that actually works in your favor. Okay, we've covered a lot, but here's where things get really interesting. DeFi isn't just about reinventing traditional finance, it's about creating entirely new possibilities. Take NFTs, for example. These unique digital assets are revolutionizing ownership in the digital world, and DeFi is taking it to the next level. We're talking NFT-backed loans where you can use your Bored Ape Yacht Club NFT as collateral. Or how about GameFi, where gamers can earn real money playing blockchain-based games? DeFi is blurring the lines between finance, gaming, and even art. It's creating a whole new world of possibilities, and honestly, we're just scratching the surface of what's possible. Now, before you go all in on DeFi, we need to address the elephant in the room: regulation. Governments around the world are still trying to wrap their heads around this whole decentralized finance thing. The lack of clear regulatory frameworks creates uncertainty and risk for both investors and developers. The U.S. Securities and Exchange Commission, the SEC, has been particularly active in this space, scrutinizing DeFi platforms and even threatening legal action. This regulatory uncertainty is one of the biggest challenges facing DeFi adoption. It's like trying to build a house on a foundation that keeps shifting. Until we have clear guidelines, DeFi will likely remain in this gray area, which can be a bit unnerving for some investors. Chapter 7. Code is law, but code can be broken. Security risks in DeFi. Let's face it, in the world of DeFi, security is paramount. We're talking about your hard-earned money here. And while DeFi protocols are designed to be secure, they're not immune to hacks and exploits. Remember the DAO hack back in 2016? Or the more recent Poly network hack? These incidents highlight the vulnerabilities that exist in the DeFi space. Smart contracts, the backbone of DeFi, can be exploited if they're not coded properly. And let's not forget about the human element. Phishing scams, rug pulls, and other malicious actors are always looking for ways to take advantage of unsuspecting users. So, how do you stay safe in the wild west of DeFi? Do your research, use reputable platforms, and always double-check those transaction details. Okay, let's be honest, DeFi can be a bit of a maze to navigate even for experienced techies. The user experience can be, well, let's just say it's not as intuitive as your average banking app. From setting up a crypto wallet to understanding the intricacies of different protocols, there's a steep learning curve. And let's not forget about the jargon. Liquidity pools, impermanent loss, yield aggregators, it's enough to make your head spin. This lack of user-friendliness is a major barrier to mainstream DeFi adoption. Most people just want a simple and easy way to manage their money, and right now, DeFi isn't quite there yet. But hey, the good news is that developers are working hard to improve the user experience, and we're starting to see some really promising developments in this area. DeFi is all about decentralization, right? Well, it's a bit more complicated than that. While DeFi aims to remove centralized control, the reality is that many protocols still rely on a small group of developers or foundations for governance and decision-making. This concentration of power can lead to potential conflicts of interest and raises questions about the true decentralization of some DeFi projects. It's like saying you're running a democracy when in reality, a small group of elites still holds most of the power. Now, this isn't to say that all DeFi projects are like this. There are many projects working towards true decentralization, but it's something to be aware of as you explore the DeFi space. Now, you might be thinking, if DeFi is so great, why haven't traditional financial institutions jumped on board? Well, big institutions like banks and hedge funds are definitely paying attention to DeFi. They see the potential, but they're also hesitant. Regulation, or the lack thereof, is a major concern. These institutions have to comply with a complex web of rules and regulations, and DeFi's regulatory uncertainty makes them understandably cautious. Then there's the issue of scalability. DeFi is still in its early stages, and most protocols can't handle the massive transaction volumes that traditional financial institutions deal with on a daily basis. So, while we're starting to see some institutional interest in DeFi, widespread adoption is still a long way off. So there you have it. DeFi has the potential to revolutionize finance, offering greater transparency, efficiency, and accessibility. But it also comes with its own set of challenges, from regulatory uncertainty to security risks and user experience barriers. Will DeFi replace traditional finance entirely? Probably not anytime soon. But it's definitely shaking things up and forcing the traditional financial system to adapt. In the future, we're likely to see a hybrid financial system emerge, one that combines the best of both worlds. The innovation and openness of DeFi with the stability and regulatory clarity of traditional finance. So, is DeFi the future? The answer, as with most things in life, is, it depends. But one thing is for sure, DeFi is a force to be reckoned with, and it's going to be incredibly exciting to see how this space evolves in the years to come. Thanks for watching, and don't forget to like, share, and wave with Blockwave. Subscribe for more crypto insights.